Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Friday, July 31st, 2015. Charts, as usual, brought to you by eSignal. Hope you had a good trading week. Here's a look at the ES front month futures contract daily chart. You can see we did bounce off that 2062.50 level that we hit on Wednesday or Tuesday and Wednesday. Got a little bounce off of that. Keeps us right in this horrible range that we've been in now, essentially the entire year of 2015. That's 7 months added up, and really we were sitting right here basically at Thanksgiving even, so you're going on more like 9 months of this junk. Just been really narrow activity. Usually we don't do these previews for Friday as the week has pretty much run its course. Fridays tend to be a little light. However, since we missed yesterday a report here or a YouTube because I was on the road, I thought what I'd do here instead is not so much talk about what to expect for Friday. I can cover that pretty quickly. But to talk about August in general, as many of you know, one of my favorite trading months of the year is August. So let's talk about first tomorrow. What do we expect? It's the end of the month. It's a summer Friday. It's probably not going to be too exciting. We do have some economic data coming out in the form of the employment cost index an hour before the bell, Chicago PMI 15 minutes into the market, and Michigan sentiment 30 minutes into the market. So with that, we'll be maybe seeing some action in the first hour or so, hour and a half, and then things will start to slow down as everybody heads out to see Mission Impossible or whatever it is for their summer weekends and Fridays and get in the pool and the beaches and whatnot. So that's normal, but let's start focusing instead on what to expect for August. So I'm going to scroll you back. We're going to go to the S&P. By the way, the S&P literally closed up 0.06 on Thursday, about as flat as you could possibly be. The NDX was up 17. I'll run you through some of the other numbers real quick. SOX was up 2, biotechs were up 11, Google was up 3, Apple was down 50 cents, the VIX dropped 37 cents. I'll show you that one. Puts it right back at the near the low of the year, near 12. Crude oil was down after a bounce for a day at 48.45 for the close. Gold continues to plunge. New low close on gold here. The trend closed at 1.39, puts the 10-day moving average at 1.08. Advanced decline ratio, advancers did lead decliners the last 3 days. That's very different from the prior 10 days, which is interesting. NASDAQ volume closed at 1.7 billion shares. All right, so that's the basics. Now, instead of going through all the rest of it, we know what to expect for tomorrow. Let's go back through prior August. So as I scroll through these charts, look at the bottom, and I'll stop. I'll put the August of the year in the middle of it. So we're in 2015. We're about to enter August. So I scroll back. This in the middle of your screen right now is August from 2014, and you can see after a couple days of slow start, it had a pretty nice rally. It's actually a reasonable 120 point or so rally, almost 100-point rally on the S&P 500 index. Better than June, better than July, better than September after it, better than May. So very calm. That's to me kind of a typical August. A lot of times it is historically one of the most profitable on average. If you just take every August going back 100 years and average them, you take every July going back 100 years and averaging them. August is one of the most consistently profitable months of the year. Now, September is one of the most consistently negative, and it is certainly an outstanding trading month. August is a little different because what happens in August is the big players tend to go away on vacation, especially out of Europe, but there's a lot of money globally that's their summer break. And so what happens is things tend to move a little bit more. It's because there's less of the professionals in the way. And so you will see things sort of follow through better than typically than what you've been seeing in the prior months. So hopefully we'll get something like that. But let's keep going back. So that was 2014. Let's go take a look at 2013. So right in the middle of your screen. Again, 2013 was a year where July was up and August was basically the parallel mirror to the downside, same move. But it was still a decent move for the S&P in August, and then September was actually back up, which is unusual. 2013 was kind of an inverse year with August down and September up. The September up part really doesn't happen much. September is the only month of the year, if you go back the last 100 years, that averages a negative return in the markets. It's pretty interesting. So that's 2013, but there was at least some movement on August. Let's go back to 2012. Again, a down day to start the month, and then we shot up for a week or two, and then it got a little flat after that. But still a generally positive month, and I would say that you look at that cup and handle formation on starting back in March, April, then cupped out into August, and then again September was a positive month, which is unusual. But you broke out of that nice cup and actually had some run days there. But August was the setup for that. That's 2012. We're going to keep going back and do this, going back a ways. Here's 2011. This was an interesting one. August was the widest month of the year except for October. They were both very close. It was a big down month for the first 8 days or so, as you can see. Then we bounced pretty decent, and then we came back down. There was some whip. Generally speaking, though, you're talking about 200 points of S&P range that August. That's a good August in 2011. Much better than what we saw in July and June before it. September kept the volatility going, and October got a bounce, as usual. Let's go back to 2010, another year where, it paralleled the moves in June and July, but it was more consistent in one direction, which in this case was to the downside. After hitting that, you can see the dash, which is now a dash green line, the static trend line. So if you look in June, you have the 9-bar move to the downside. That creates the green line. Came back up in July, hit it, rolled over, and then you got a new 9-bar move to the downside that ended at the end of August, but it was still a decent month from a trading perspective. That's 2010 in August. Notice the rallies that all start late in the year every time. Now remember, one thing to focus on is that the federal budget ends every year at the end of September. So the focal point, the reason you get so much flip in the market is that all the money is being reallocated as they negotiate where the money is going to be spent in the new federal budget. And obviously if somebody loses a contract and somebody else gains a contract, then money moves from one stock to the other. But the key is, what if we have another government shutdown? Obviously, that's not a positive for the market, and there's always a possibility with this particular Congress. So, there's going to be some uncertainty, I think, unless they start saying things that indicate that they have no plans to do that. But that's why you tend to get this volatility, and when I went and showed you 2011, a minute ago, remember this was the year where we had the brief government shutdown and the threats about it for a while. That's why you got some of that volatility. So here back to 2010, just a normal kind of downward cycle month. Remember, if they get the budget done fairly early, then the uncertainty is released, and market starts to rally maybe in September. Otherwise, you tend to get these wiggles in September that leads to sort of a little panic in October, and then you bottom in October and run from there. Let's go back and look at 2009. Here's one where I'd say August was not very exciting, finally. One of the few Augusts that we're looking at here where there wasn't just a lot of movement. It was more like June. May, June were not exciting. July rallied. August flat. September not much better. Was not a super exciting year in 2009. It was more of just a general rally mode the whole year, but the ranges were not great. Remember, we were still coming out of the complete collapse, which is what you'll see here. This is 2008. This is the market breakdown. What's interesting about this, if I put August right in the middle, in 2008, the markets had rolled over in May and June. Now that, for those of you who really want to go back, that was when crude oil crossed $80 to the upside and held it for the first time ever. Okay, and that was the point where we sort of got this tipping over of the market started to roll. And we got the initial roll from, May, June. May was the top, June, July. Wasn't a big deal. Didn't look like anything much. August, if you look at this August in 2008, ironically, was actually incredibly flat. 50 points of S&P range, the flattest month of the year in this case. And then they came back in September and things started to really fall apart. And by October, we were in full meltdown mode. And you got to realize, you got to look at the scale of this chart. The S&P had hit over 1,400 in May. And by the end of this chart, which is, or even just by November, we were at 750. So basically almost cut in half, one of the biggest financial meltdowns in history. And August stands out as the one boring part in the middle of all that in 2008, so we can't really use that as an example of a good August. Here's 2007, a lot of volatility in August, swung both ways. First up, then back down, then up. Again, with the bigger players out of the way, the moves get a little more exaggerated, but that's actually good for the individual stock trading. I'll just go back one more year. We don't need to go forever. Here's August in 2006 was a nice rally year. That's what a typical August looks like. Flat early and then just kind of went up. So I think August are good months from a trading perspective, typically speaking. You get a lot of the professional shorters and people who are trying to squash every move and play counter are gone. It just makes things a little cleaner. That's what we tend to see. Obviously, the Congress is out of session until late August or September, so you don't have any news really out of Washington other than maybe political election news, but that's, since the election's over a year away, that's not going to have a huge impact on the markets. So I think, again, we've been obviously stuck in this horrible range. The volume's been back and forth, sometimes okay, sometimes not great. We got to break it at some point in time. Is August a month where we could do it one way or the other? It is, actually. It's more likely than a July, I think, to really have broken out of that range. And even June tends to not be a month that instigates a move. August is more likely to do it. September could do it. And then I would expect, of course, at that point and beyond, we're going to be in some good volatility for the back end of the year. Be very unusual not to see movement September, October, November, once the budget's passed, etc., or if there is no budget passed. So that's the preview of August. I hope you guys found that useful. But that's, I'm looking forward to the month. I think it's a good month, and it starts next Monday. It doesn't mean that everything just gets interesting immediately, but certainly tomorrow, Friday, July 31st, not going to be very exciting. If you do find these videos useful, please like them on YouTube. If you have not taken a trial of our services, you can do so at any point in time. We'll help you out for a couple weeks. And I will be in the Trading Lab. Have a great Trading Friday. And next week, we'll have a market preview for next week with more details about the actual day-by-day action over the weekend.